there everyone, welcome back to the LFS Academy. So in this video lesson we're going to be talking about my liquidity sweep strategy. Remember in our previous class we talked about trend line strategy and the good side, the bad side of trend line strategy, and how you can use trend line strategy to make money from the forex market. Right. So in this our specific video tutorial, we're going to learn about the liquidity sweep strategy I introduced you to, right? Because the trend line strategy is something like every forex trader, right, know how to use, but it doesn't guarantee you profitability. Although consistency matters. If you can just focus on trend line strategy as your own main strategy and you're consistent with it, they see a very high guarantee, right, that you can make money from the forex market using that trend line strategy. But for now, I'm going to be teaching you liquidity sweep strategy. That is the one I developed by myself. Alright, so when we're talking about liquidity sweep, you need to understand in general what is liquidity sweep. Liquidity sweep is when price come to take down traders SL in order to fuel the market overall direction, whether it's for a sell or for a buy. I'm going to make this video as short as possible, so just going to round up everything you need to know about liquidity sweep. So now the first thing you need to know about this liquidity sweep strategy is first the overall market structure. What is the market doing? Like, what is the overall market structure? Is price bullish? Is price bearish? Is price trending? Right? Is it consolidating? Is it ranging? Is it choppy? Right? What's the overall market structure? It's very important to know because it tells you whether you should stay away from the market or you should go for a buy or sell. So it's very important you understand the overall market structure of that pair or that particular day. The next thing you need to know is protected low. Sorry, I think this needs to come after inducement seconds. Next thing you need to know for is inducement liquidity. Sorry. So now the inducement liquidity is or I could have just made it as liquidity, right? Inducement liquidity is liquidity that you know that price need to take out, right? You know the price, that is the liquidity itself, the liquidity sweep I'm talking about. You know that price is going to take out this liquidity. That's what I mean by inducement liquidity. So you want to see where are traders actually putting their SL and where am I going to put my entry, because I want to put my entry where other traders put their stop loss. Alright, so now that is what I mean by inducement liquidity, the place where you know that there's more money in the market, you put your entry there, right? Then the protected low is the region where you know that there's no plan, right? There's no idea for price coming there at all, right, to take anybody's SL, right? That is your protected low. Then you wait for a liquidity sweep, price taking out this inducement liquidity and then finding good entry and exit points. So I'll make this video as short as possible to save time. So I'm going to try this strategy, backtest it for you guys using XAUSD. You can also go home and practice it by yourself with your own PC or with your tablet or with your mobile phone, any devices you have, and to see how everything is going to work out perfectly. So first is market structure. I will just do a quick example here. Let's go straight to the charts. Market structure is overall direction of the market, and when you want to check overall market structure, always look at higher time frame. When checking overall market structure, always look at higher time frame. So now you know that XAUSD market structure is bullish, like gold is just buying, right? Buying, there's a very clear uptrend. So that since there's no clear structure here, I'd like to go lower to the 4-hour time frame. And the 4-hour time frame is showing me a temporary downtrend that gold might respect. That is this one. Although this is looking like a double top, let's mark this like this. So this is market structure for XAUSD. So now, since you have it in your mind that XAUSD is on an uptrend but showing a possible short-term, let's say a short-term downtrend, all right, you need to now go to the 3-hour time frame to just confirm and see if you can find any other clue. Some of you will say, yeah, there's another uptrend here. Yes, we already know that gold is another uptrend, so during this one does not really matter. Alright, all you need to do is to just mark what really matters and go to the next point. So now we already know that there's a short-term uptrend and we want to now find the next stop. So overall, my market structure, I'll always obey the bigger time frame. Bigger time frame is telling me gold is a buy. Then you need to find inducement liquidity. Don't always forget that whenever you're not seeing clear direction in the pair, especially a pair that has USD as its pair, right, maybe as its quote or its base currency, always refer to the dollar index. Always refer to dollar index to just help you to clarify things up. If dollar index is buying and is a pair like XAUSD and DSY is buying, that means the pair is supposed to be selling, but it's not on gold. Sometimes gold seems to be, so not my advice, but just a clear in case you need it in the future. So let's see. So in this case, we are now looking for inducement liquidity. Remember, liquidity is something like this. Price come in the different ways. There are different ways liquidity can play out. Liquidity can play out somehow like this. Price make a low, right, a high, come and make another low, make another high like this, right, come do something like this, come here, take out this low, come to this upside. Liquidity can also play out something like this, this high, come to this low, breaks this high, come where this, break this high, take out all this, go to the upside. Yes, liquidity can also play out like this, come here like this, come here, or come here like this, right, come here like this again, come here like this again, right, take out this low, go to the upside like this. So either way, this is the region that price is taking out this liquidity. The second low or the second high, most of the time, the second low, the second high is the liquidity that price is mostly come to take out, like this one, maybe the second low. So for your case, I know you may be wondering, but this is how I understand my liquidity, and I've been using this to trade for years. So this is how liquidity looks like. Okay, and for the sell side, for 5 minutes, so I can see very sweet liquidity sweeps. So you can see this liquidity sweep. I want to be as fast as possible, right? You can see the liquidity sweep that price did here. Price just came here like this, from this low, right? Price came here from this low, right? This is the second low, right? And what happened? Price came and swept it. That was liquidity sweep. That was the liquidity sweep we're looking for. So what happened when price did that? Price came, I went to the upside, right? And I did. Well, this sell must have happened based on news event or conditions, but the idea was that liquidity was taken out and price started moving to the upside, and price also started selling from here. Why? There was also another liquidity sweep, right? This is, although I don't want to go too low, but this is a liquidity region too. This is also a supply, a resistance level that price respected. This is also a resistance level that price respected. Alright. It's also a resistance level that price respected. So yes, let's say price respected here because of the resistance level. But for me, I feel there was also liquidity price swept to go there. But let's keep moving to show you more liquidity sweeps. Good. Another one, I'm saying another one. Price did this, right? It just did here, came up from this new low, came up, and what happened? Took out this liquidity, then bounced it on the other side, right? You see liquidity sweep. This one, you see liquidity sweep. Alright, and what happened? Price bounced up, right? And what happened? Why the price respected? This is another liquidity sweep. I know that. This is another liquidity. This is actually a double top, right? This is a double top, and I know that price will later come back. Yeah, gold is actually coming back to this double top. This is a liquidity level, right? It's just from the more liquidity levels. I know that gold will still come back here to take this liquidity before it will keep selling again. So guys, just this for current market. Let's go to past data, like past data. Let's see more liquidity sweeps. I try my best to make this video as short as possible. Okay, another liquidity sweep I'm saying. This one, although this one wasn't taken out, was it? No, it wasn't. But this was this liquidity sweep here. It was only taken out 2 times. Price came here like this, right? From this low. After this buy, a lot of traders have put a stop loss here, right? A lot of traders have entered that one because not everybody will catch this spike. Whenever a trader sees something like a retracement here, okay, like this, many want to put a stop loss on this low and then TP. Let's say this high or higher, or the material is saying all-time high, something like that, and then price do something like this. As well, price did, it came to sweep this liquidity and then buy into the upside. That is the idea. And then what happened? It also came back to this liquidity sweep again. Alright, it even came more lower SM to show you that it was really after this guy's SM. So that there was there was more liquidity. This one was another liquidity. This is another liquidity that came to sweep, as you can see. So price literally came to sweep this liquidity. That is for traders who actually, let's say traders who actually bought from here, right, and put that SL here. yeah, price still came to sweep them, right? Although they were massive profit, that is those who didn't close, who were greedy, price literally came to take them out, alright, before ditching in about 100 to 200 pips up. So you can see how crazy market can be, how liquidity sweep really play in the market. So that is just a little short video on this liquidity sweep. So let's go straight back to our strategy. So what we're saying, the first thing we look out for is what liquidity, that is inducement liquidity. So after finish finding liquidity, what do we look out for next? Here's our text. Here's our text. So while we say something, we look out for market structure, which we have done, and after market structure, we look out for liquidity. After liquidity, that is inducement liquidity, we'll look out for the inducement liquidity taken out. Okay, then we need to find entry and exit position. So now entry and exit position is a very important topic, right? Because it is a good thing to have a strategy, but it's another very important and a good thing to also know how to enter the market and exit at the right time. For me, I have a strategy and a rule that says that I do not exceed 1:3, like minimum of 1:3, maximum of 1:3.5. That means no matter what I'm doing, right, no matter what we trade and placing, my minimum RR must be 1:3. My SL, even though my SL is too small, I will extend it till it reach 1:3, alright, and my maximum must be 1:3.5. So that was the rule that I gave myself. You understand? So that is the idea behind having the trading rule and the trading and the risk management strategy. For example, now, if for example now you are among traders who notice this liquidity sweep, because this is so, okay, let's say this was this is a liquidity sweep actually. Price came to sweep this liquidity here, right? Price literally came to sweep this liquidity. This is the protected low. Alright. Oh yeah, I also marked up protected low. I'm not even saying what I wrote. This is the protected low, right? This low was the protected low. You mark it out. This is the low that price made. I respected it here itself to show you a lot of traders put their sell on here. So this was actually the main place that there was liquidity, and price came and respected it, right? So price came and then stripped down liquidity before going to the upside. So what I'm trying to say is that if I was in this trade and I know that's liquidity, right, and I know that's liquidity, and I enter sell around here, and I know I get realistic TP like this previous high, I will always make sure that my RR is 1:3. Once it's 1:3.25, I'm okay with this. So you get my RR must be 1:3. It cannot be within. It cannot be more than 1:3.5. Right, it cannot be less than 1:3.0. It must be in that range, right? It helps me to put realistic stop loss and realistic TP. You can also implement that to your strategy, but you can also find your own, the one that fits your emotions, because trading is all about the one that can follow your rules, that can cope right with your trading emotions, right? So we'll mark out a protected low, and then find good entry and exit positions. I want to make this video as short as possible, so let me go to a pair, ERUSD, right, and let's do a short market recap before we round up this video. So let's find a quick liquidity sweep. Quick liquidity sweep. Good. So now this is the liquidity sweep, right? We are looking at it already. You can see what price did here. This is the protected high. This way is toward the sell side, so we are dealing with high, not to low, right? So this is the protected high. This one is protected. This is liquidity. This is liquidity here. This one. So you want price to take out liquidity. Then, oh, I forgot to tell you guys. I'm so sorry. So sorry. You mark out 50 pip level between the liquidity sweep and the protected high. I forgot to tell you. I forgot to put it down. Sorry for the mistake. I will simply explain that. You mark out the 50 pip level. 50 pip level, Fibonacci level from here to here. 50% retracement for this level. Or if you want to make it more easier for you, just use my kind of rectangle and and edit it to show you 50% line, right? Like this. You go here to your setting, you go to style and put middle border, mark it, then put it to whatever color, say green. Good, something like this. So you mark out this 50 pip level, okay, and that is where you want to put your entry. That's how to find the entry point. I'm so sorry, right? It's how to find the entry point. Put your TP at the previous high. Then, like I said, my arm will must surely be 1:3.5. Yes, this way I will always feel my SA. Right, whether it's too big or not, I don't care. This way my arm must always looks like. So this is the liquidity sweep strategy I'm talking about here. So let's do one more example. Okay, let's do one more example. Let's find one more liquidity sweep. Okay, we are seeing another one. This is a lot of liquidity sweep. You find so many, you even get so tired. So this is the protected low, protected high in this case. Okay, this is the liquidity level from here like this. In this case, price didn't even reach the 50% level, right? But always mark out the 50% level. So you want to mark out the 50% level, right, and wait for price to come there. But in this case, price didn't come to the 50% level, which is fine. Don't enter the trade. It's part of the strategy. You come again and find a good entry. Like here, price did came to the 50%. If this is liquidity, right, I did the protected low. Did the liquidity, right? From liquidity to the protected low, price literally came to the 50% level. As you can see, got this liquidity level here, right? Before market even made all this move, you say it's liquidity level here. So I can see this is a sniper entry, right? With the 50% level, then put in realistic TP. My TP can be around here. In my SL 1:3.5. Yeah, around here. So this is where So when you see something like this, don't allow FOMO to hit you. Alright, the best thing to do is to avoid this market. Alright, once your trading rule and your trading strategy don't click into the market, don't enter. So that's what you just keep doing, and that's how the strategy goes on. Sorry, I'm trying to make this video as short as possible, but you can also go back to the video if you don't understand any little part, so you can just grab what I'm trying to say. Alright, so the idea is price coming to take out. Right, let's go back to our text. So the idea is price coming to sweep liquidity, right? Overall, first you need to understand the overall market structure. And why is it important to understand the overall market structure? So you can know your bias. Alright, as we went to gold now, we saw that gold, overall market structure for gold is bullish, right? All we're looking for is buy entry, right? Because we know that overall market structure for gold is bullish, right? Same thing, the market structure overall, understanding the overall market structure help you to get a bias, right, when you are entering the market, right? So that you not place trade blindly. Alright, then after that, you now want to mark out the liquidity region. Alright, you want to mark out where you feel many traders SL are. You want to see price make a first low and make a second low, right, or make a third low. You want to be able to mark out, okay, yes, if this should be my this should be my safe area, like what I did here. Right, like what I did there. Price made this first low, this second low, you can know that it's my protected high, right? And this is my liquidity. So the protected high must be valid, your liquidity must be valid, and you want to see price take out that liquidity. Once price take out that liquidity, then you go. But in this case, price didn't take out this liquidity, so it's waited for this one. This was a protected low we marked out, and then we saw liquidity, and then what happened? Price took out the liquidity and came to the 50% retracement from these two space, right? That validates the setup that, okay, yes, it's the best time to enter 1-3. And what happened? Price hit our entry and distance TP. So that is the overall how everything goes to work, right? So that is everything I can tell you about this my liquidity sweep strategy. This is not all. I'll say come back again to talk about it, but to make the video short, that's all I can say for now. So thank you guys for watching, and I hope to see you make profit from the forex market. Yeah, so